Hello, and welcome to the Investing on the Go podcast. I'm Chris Sarley, and today we're joined by Peter Ewins, manager of the elite-rated BMO Global Smaller Companies Trust. Thank you for joining us today, Peter.
Oh, thanks for having me, Chris.
It's been a bit of a challenging or even brutal year for smaller companies, especially in the UK, where you have about 25% of the trust invested. What's it been like investing through these difficult times where small caps seem to be in the eye of the storm?
Yeah, it's been a very, very tough year. I know, brutally, I think you said. Yeah, it's been very tough. I mean, ultimately, none of us, I don't think any fund managers out there have worked through a pandemic situation before. So I think we've been learning as we go along, really, as to the impact of this COVID on the markets. And obviously, we've seen some huge moves. I think we found it very tough as a team. We found it very tough in the early part of the pandemic, where you just saw this horrendous set of company announcements with companies putting guidance, cutting forecasts, etc., and share prices collapsing. Quite depressing, really, because you sort of sit there with a portfolio that you think is actually well set up for the environment, and then all of a sudden the environment was totally transformed. So I think we all found that quite difficult. I think we then spent some time looking at balance sheet risk on the portfolio, because obviously profitability was going to be falling up sharply for a lot of companies. We were looking at balance sheets closely, took some action in relation to that, to where we thought financial risk was too extended. Then we started thinking about what are the structural longer-term impacts of the COVID on the pandemic on people's behaviour, potentially, things like working from home, like we're doing now. Is that going to be a longer-term thing? That has ramifications across various sectors. So we spent a lot of time thinking about that. And then obviously more recently we've had, signs of economic pickup, and then another resurgence in virus cases, which obviously sort of hit the markets back again in October. And then most recently, obviously, we've had the good news on the vaccines, which has led to a massive surge in the market. So it really has been a roller coaster ride, from the market's perspective. And you mentioned the UK. The UK market has been impacted hard by COVID. It's got quite a pronounced skew to some of the worst hit sectors. So, we have seen that market has been difficult this year, but it is bouncing back along with the other markets.
There's an element of the sort of glass half empty versus glass half full scenario here. So the fact that smaller companies have struggled also means that a number of regions, the small caps are now pretty cheap versus their larger counterparts. I mean, does that mean you've been able to pick up bargains since the start of the sell-off? Yeah,
I mean, smaller companies, I think they entered 2020 having had a couple of bit disappointing years. They had lagged the larger cap indices in a lot of parts of the world, with, as everyone knows, the big technology stocks in the US driving, doing fantastically well. And interest was more on the large cap side for quite a pronounced period of time. And people were worried about the macro environment. People are worried about Brexit and other issues that were going on. So smaller companies, had tended to lag going into 2020. I think obviously when the pandemic struck, I think they then lagged again quite sharply in the initial sort of sell-off. With that sort of greater economic sensitivities around some small companies, you saw people retreating from them. Now what we're seeing is obviously that sort of reversing, and people now actually more positive on the outlook with the vaccine news most recently. People now looking for recovery plays, and we've seen smaller company indices actually outperforming the larger company indices quite strongly since in the last few months, really. So it's turning out to be, funnily enough, it's turning out to be a better year for small companies than you could possibly believe back in March. In terms of the bargains, there's obviously there were bargains to be had with the benefit of hindsight in March and April when people were panicking. Obviously we topped up a few things at that point in time, but we should have bought a few other things as well. So it's been a very challenging time to manage a portfolio for any fund manager this year. But there were bargains there. I think we still think there are some opportunities in the markets now. But obviously things are, broadly, the things that were hit hard by COVID are probably 50 to 100% higher than they were at the low. So, and in fact, in some cases more than that. So the bargains are less on the ground than they were.
You mentioned the vaccine, and we've had the sort of vaccine bounce and the catalyst, as some would point out. with your sort of globe out, do you think 2021 could be a good year for smaller companies to sort of continue continue to outperform perhaps?
It's possible, yeah. I mean, it's always difficult to be too prescriptive. I mean, obviously at the moment the markets are very confident about the success of the vaccines and the rollout. I mean, obviously we don't really know at this stage how successful that rollout's going to be. It could be that there's another resurgence in COVID, further lockdowns put in place in the start of next year. I think the market is looking for the vaccines to be making a big difference to things, back at the end of Q1, maybe through Q2, and is hoping for a more normal sort of summer period. We don't really know whether that's going to happen. If it does happen, I think if the vaccines roll out successful and economic activity picks up, then that is good news for smaller companies, and people will probably continue to favour them over the more steady, larger companies which have done better in the early part of the pandemic. But we'll have to see. I think we've, as I said earlier, we've already had quite big moves in the indices. So we'll have to see as time goes through. But smaller companies do tend to do better coming out of sort of recessions. That is the scenario we're looking at the moment. Hopefully, subject to these vaccines being effective.
So just going back to the vaccine, it's only sort of been, a handful of days since we had the news. Have you had any companies that have felt sort of the benefit of the bounce?
Well, I mean, yeah, the markets are up very, very strongly, Chris. And not just the smaller companies. The market as a whole are up, very well in November so far. So obviously, we've had some good rises. I mean, the companies that have done best in November to date have been sort of the mirror image of what did well in sort of March, April, i.e. companies that are potentially perceived to be, that are maybe hit by the lockdowns, companies in leisure, travel, hospitality, those sort of companies have been very much favoured as people are looking forward to the time where things normalise there. So, travel agencies, transport companies, restaurants, pubs, sort of companies, very strong in the last few days since that vaccine news has come out. And at the weaker side, the things that have done very well, maybe some of the technology stocks, some of the beneficiaries of the staying at home trend, some of the food companies, maybe companies that have just done well through that period of people forced staying at home. Those shares have lagged in the rally, but the markets are up very strongly, and so we do have some good movers.
Okay, and one area that perhaps has done surprisingly well is Japan. Could you maybe explain why that is? I mean, is it purely political, and maybe talk us through some of the funds that you favour in that space?
Yeah, and Japan's doing okay this year. I mean, it's not top of the charts in terms of performance this year. It's benefiting from its geographic location, because ultimately, as we know, China it was the first into this crisis, but got it suppressed quite well. And Japan is very closely linked to China and other regional markets out there in the Far East. So the fact that China's recovering is helping places like Japan. Their economy is going to shrink at about 5% this year, 5.5%, I think, is the current forecast. That compares to the UK shrinking at more or less 10% or even more than that. And other countries in Europe similarly, worse hit by COVID. Japan's stock market has actually got there's quite a few sort of more cyclical companies in it. So some of the things like automotive companies, the automotive supply base, those have been picking up as demand in China for cars has picked up more recently. So that some parts of the Japanese market now are doing better than more cyclical end. So the market as a whole, the Japanese small company market has done okay this year, but it's probably not done much better than most other parts of the world, to be honest. I think in terms of our funds, we do own 3 funds in Japan to give us exposure to Japanese smaller companies as opposed to individual holdings. And those are managed by Aberdeen, Baillie Gifford and Eastspring. Aberdeen have done well this year. That's a sort of a quality growth approach. Baillie Gifford have done absolutely fantastically this year. They did, then obviously they've done well in the last few years with their focus on the tech and tech, medical companies, health companies, and if you like, innovative digital sort of companies. That sort of strategy has worked fantastically again in 2020. More recently, it's maybe not been quite the place to be in this post-vaccine sort of news period, but it's done very well for us this year. And then Eastspring, the last fund we own, is much more at the value end of the market, has struggled in 2020, but it's actually recovering as we've seen. The vaccine news is good news for that fund, probably, as it's more aimed at more investing in the more cyclical and more lower value stocks. And I think we certainly have seen a bit of a trend towards value stocks as opposed to growth stocks in the last month or so. So we've got a blend of different funds, but they're all investing in different holdings. But overall, they're actually doing well in 2020 for us.
And just finally, Peter, the trust isn't necessarily known for generating an income with investors, but you've actually got a great track record of increasing the trust's income. Have you managed to maintain that this year, and maybe have you been using the revenue reserves for this type of scenario?
Yeah, so the company's financial year is the end of April, so they did report in June that it was the dividend was pushed up for a 50th consecutive year by the board. We're obviously not we haven't released interim results at this stage at the moment, and the board will be looking at the dividend for that period in the coming weeks. The company has grown its dividend over the years consistently by effectively benefiting from investing in companies that themselves are increasing their own dividends. So it doesn't happen by magic. You've got to invest in companies that are actually paying out increasing dividends themselves. So in most years we found, and while I've been the manager of the fund, most years we found really good dividend growth from the portfolio. In 2020, 2021, the current financial year, the new financial year, it's going to be much more difficult because a lot of companies have cut dividends or passed dividends. We saw that obviously at the start of the pandemic. We saw a lot of the UK companies in particular doing that. So this year is going to be a very challenging year on the income side for the fund and for other funds really across the market. So it'll be up to the board as to whether they wish to continue with the dividend growth record. And the positive we have got is we've got a strong revenue reserve of nearly £18 million going into this year, which is there to support the dividend going forward. And it's up to the board to look at the outlook when they come to make the decisions in December and in June next year, the interim and final, as to what they want to do with that. The income, we think the income situation will improve a little bit through the start of next year as companies that cut dividends in March, April 2020. We think some of those will start paying again in March, April 2021. But again, it will depend to a degree on how that vaccine rollout is going and how the economic environment is looking at the time. And so, it's difficult to be too prescriptive going forward. But, we hope that by investing in growing companies that have got good growth potential in the future, that we can carry that record on.
That's great, Peter. Thank you for joining us today.
No problem at all. Thanks for having me.
And if you'd like to learn more about the BMO Global Smaller Companies Trust, please visit FundCalibre.com. And while you're there, remember to subscribe to the Investing on the Go podcast. Please remember, we've been discussing individual stocks to bring investing to life for you. It's not a recommendation to buy or sell. The fund may or may not still hold these stocks at your time of listening.